Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good you can join us again to begin this week here at AusBiz. Let's get across what we saw on Friday. Global equities lower. That's after President Trump unleashed his latest trade threats, recommending 50% tariffs on European Union imports from June the 1st. He appears to have pushed that back though just in the past couple of hours in terms of that date at least. Now all three of the main Wall Street indices there appearing losses, but ended lower. In fact, for the week, the Dow lost 2.5%, similar moves there by the Nasdaq, and the S&P 2.6% lower. So President Trump said on Friday that Apple would also pay a 25% tariff on iPhones that are sold in the United States but not made in the country. Most mega cap and growth stocks fell, including Amazon, Meta, Tesla and Nvidia, with the AI bellwether handing down its results this week, with forecasts that its first quarter earnings increased around 45%. Decker's Outdoor slumped after the maker of Ugg boots forecast first quarter net sales below estimates, saying it would not provide annual targets due to tariff-led macroeconomic uncertainty, and sportswear maker Nike also falling. Global equity funds, they've seen weekly outflows for the first time in 6 weeks, pressured by rising US Treasury yields and concerns about the US debt burden and tax cuts following Moody's downgrade of the US sovereign credit rating. US equity funds leading the retreat there with $11 billion in redemptions. Well, President Trump has said he's recommending a straight 50% tariff on goods from the European Union, initially saying that would begin on June 1st, but appears he's now pushing that back into July. He said the European Union, which was formed for the primary purpose of taking advantage of the United States on trade, has been very difficult to deal with. Well, a raft of Fed speakers have again highlighted the uncertainty caused by the Trump administration's inconsistent trade policies, with Chicago Fed President Austin Goolsbee saying businesses are saying they need some idea that it's going to be consistent as they look at tariff rates that high. That would be really scary for the supply chain. Well, the yield on the US 10-year note fell around 4 basis points to 4.51%. The 2-year was little change, just under 4%. And the US dollar dropped across the board as investors dumped that currency after President Trump ratcheted up his trade talk. The Aussie dollar at 65 US cents. And Bitcoin trading almost at 109,000 US dollars. Oil prices, they gained on Friday as US buyers covered positions ahead of the 3-day Memorial Day weekend on concerns over the latest round of nuclear talks between the US and Iran. Brent crude futures about 0.5% higher at $64 a barrel. Copper was up 3.5%. Iron ore down around 1% to $99 a tonne. And gold surged again on Friday as investors saw the safe haven amid renewed tariff threats from President Trump. US gold futures were 2% higher at $3,365 an ounce. Well, for more on those global trade ructions with a focus on India, Mugunthan Siva joining us from India Avenue Investment. Mugunthan, good to see you again.
Likewise, Andrew.
Let's get the latest update then. There was speculation that the India-US tariff agreement was going to be the first one to be settled in terms of some sort of agreement. What have we heard so far?
Well, we haven't heard anything definitive. We've heard that it's been constructive. We know that Narendra Modi went to the US and met with Donald Trump. We also know that JD Vance recently went to India and met with officials there. So we believe trade talks are constructive. However, it's not definitive as to what the timeline might be.
All right. Certainly indications the White House, they may reach an interim agreement sometime before July, but still fairly uncertain there. Interesting also, I was referencing that President Trump looking to target Apple. If it's not, those iPhones aren't made anywhere else but the US, then he's going to hit them. Of course, a lot of them made in India.
Yes. Yeah, well, there's been talk that by the end of the decade, India could make up to 40% of the iPhones locally. However, I think the problem with Apple not making the phones overseas is that the cost of making them in the US would ratchet up the price of a phone from around $1,000 US to $3,500 US. So I just don't see how it's foreseeable at the moment that they could make phones within the US.
All right. Now, separate to what we saw or is undergoing in terms of those negotiations between the US and India. India, of course, striking a deal with the UK. What's that amount to?
Well, it'll amount to about $120 billion of trade between the two countries. There are certain areas where the two countries have, progressed, particularly in areas of exports like auto components and so on, which India tends to specialise in, which will be to the benefit of both countries. So I would expect that India would, be more constructive on free trade agreements with quite a few regions. Australia and India have an ECTA at the moment, which is a cooperation act, but it hasn't progressed to a trade deal, a fully, completed FTA. But I think India over the next 12 months we'll see more free trade agreements progress.
Meanwhile, how's the Indian economy tracking?
Yeah, so that's certainly been a positive at the moment. After a weak spot really in the last 6 to 9 months for the markets and for the economy, we're seeing now inflation has hit a low point cyclically of 3.16. Cash rates are still at 6, so that's a massive difference. We expect cash rates to drop 50 to 75 basis points, even possibly over the rest of the year and leading to the end of the financial year in March. Tax cuts announced at the budget, which were by the way of increasing the tax threshold, which should start to filter through as of now.
Is that just personal or company tax?
Personal tax rate. So I think consumption, we certainly in our portfolios, we're starting to rebalance a little bit towards consumption, particularly of the urban variety, either through restaurant chains, banks, non-bank financial type companies, because we think consumption activity is going to pick up. Food prices are relatively benign. The monsoon is expected to be, slightly above average, if not average. And you've got lower oil prices, you've got lower rates and interest rates, which should be falling. So we're thinking the consumption story really picks up in the second half of the year.
We were mentioning Apple earlier. What are we seeing in the tech sector at the moment?
So in the tech sector, we've certainly noticed a slowdown over the last 6 months in terms of deal activity. However, what I will say is a lot of India's tech stocks have underperformed over the last year. And so now we're starting to get more constructive on the tech sector going forward, because our view is as the economies kind of look through this trade issues and global headwinds, at some point they're going to go back to the AI integration, cloud enablement, digital platform building that all companies need to enhance productivity.
So overall, Mugunthan, where are you allocating cash at the moment?
Pharmaceuticals, that's a story we've been on board for the last couple of years. We don't think that's going to change too much structurally. We've been allocating more to banks coming from an underweight position to catch up to this consumption story, as well as autos and quick service restaurants, or QSRs as such, because we do feel that's got strong leverage to the urban consumption.
And what are you seeing with the valuations at the moment?
So at the head, the interesting thing is, in the last 9 months, everyone knows that India's had a pullback before the recent bounce. That was a broad-based pullback where pretty much everything fell initially, then mid and small caps fell a bit further given the higher valuations. But what we've seen in this recovery, it's been very selective towards companies that have been able to hold their earnings growth. So whilst the markets have recovered, not all companies have recovered. And I think that's the trend globally, where perhaps the sustainability of earnings is what investors are looking for through this sort of hazy environment globally.
All right. Relatively, for its global peers, I guess, how attractive is India at the moment?
So headline valuations are 21 times 1 year forward, which I can't say looks attractive, but there are certainly companies you can find out there trading at 15, 16 times, which are perhaps under the radar and likely to thrive in this environment. I think India's messaging is very much about how we progress the economy from here, take advantage of what's going on globally, and become not just a favoured partner, but actually a significant growth economy which can grow at a much faster pace than what it has been over the last 5 to 10 years.
Mugunthan, always great to get your outlook on what's going on in India. Thanks for joining us from India Avenue Investment.
Thanks, Andrew.
Let's refocus then just ahead of the open here locally, and SPI futures, bearing in mind this is where we left off on Friday. We've actually seen US futures rise. That seemed to be based on the latest utterances from Donald Trump indicating that while initially looking to impose 50% tariffs on European imports from June 1st, he's looking to push that back now for a month or so. So we are expecting a negative open, but that way it may well change pretty quickly when we get underway. Join us for that in a couple of minutes.